Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Wednesday. It's January 18th. It's about 8:17 or 8:18 in the morning. The market's going to gear up to open about an hour and 12 minutes. Today is Wednesday. It's a hump day, but it's an official second day of the week. And we've got a lot of Fed data today, a lot of Fed data. We've got PPI, we got retail sales, we got industrial production, and then to sprinkle on top, we've got James Bullard and Logan speaking. So it's going to be a wild, wild day for the market. Let me start off by showing you two things that you need to pay attention to, the most important things. First of all, real estate sector. Real estate sector is getting extremely overbought. When I say extremely overbought, we're at one of the highest levels we've seen in, let's see. It's one of the highest levels we've seen since this has been on record since 2016 or beginning of 2016. So the last 7 years and 1 month, one of the highest levels. Now, overall, I wouldn't make too much of a deal about this, but if you look at the stocks in the real estate sector, as I mentioned yesterday, only 39% are trading above the 200-day moving average. So this is grossly overbought, like as overbought as you can get. So I would expect stocks in the real estate sector to start cooling off. If you're long stocks that are in the real estate sector, you may want to pause them or take profit on them because most of them are rallying really hard right now. But the foundational strength is just not there. That's the first thing I wanted to talk about. The second thing I wanted to talk about is the energy sector. Now, energy sector took a big dump. We had the 50-day moving average all the way down, but the 200-day moving average stayed above 50th percentile. Now, take a look at where it's moving right now. See how it's moving higher? That's the number of stocks in the energy sector trading above the 50-day moving average. Well, we're right at a pivot point, but take a look at crude oil. This is a 1-month chart of crude oil. So you can kind of see what's going on here. It looks like crude oil is breaking out and starting to go a little higher again. Now, I'm hoping this is not just a false rally, but it's looking good. And to confirm this is the XLE ETF. This holds about 30 to 50, probably about 40 top crude oil or energy and natural gas stocks. And you could see here, it's now trading above the 50-day moving average already 1, 2, 3, 4 days in a row. And all-time highs are at 94.90, and we're at 90.90. So what I'm trying to tell you is this. Energy stocks look like they're making a comeback. And at the same time, real estate stocks look like they're topping out. So I would be probably going long energy stocks right now if I could find a good strategic point, which I'm not sure I can. And I would probably be looking to take profit or liquidating the real estate stocks because we're overbought and there's just not a lot of follow through in terms of the momentum levels. So that's the first thing I want you to keep in mind. Now let's talk a little bit about pre-market the pre-market game plan so we can get ready for today, and we'll kind of go over all the things that are on the table today. So regular sessions were not going as great yesterday. We had Goldman Sachs report, we had Morgan Stanley report. So far, we're going to be digesting PPI today and retail sales. That's going to be the big Fed reports, PPI and retail sales, and that's coming out in about 9 minutes. We may even get that before before we are done with this session. So the Dow dropped over 1%. The Dow was a lot worse than the rest of the market. Goldman Sachs weighted on most of the index after Wall Street declared its worst earning miss in a decade. That's not good from the biggest banker in history. Tesla limited losses and helped the Nasdaq close in the green. If you want to hear my analysis on Tesla, I went pretty deep yesterday in the VIP room. You may want to catch the replay of that. But in a nutshell, I believe the stock is way overpriced and it's not as shiny as it was 10 years ago when it came out. I think it can drop in half and not still be overpriced compared to Ford and GM, because that's who it's going to be competing with in the next couple of years. It's not going to be competing with itself like it's been doing for all these years. Analysts expect earnings from the S&P to drop 2.4% for the quarter compared with the expected decline of 1.6% at the start of the year. Now, folks, I don't know about you, but the year just started. It's only the 18th. So this is significant, and that puts more pressure on the stock market. And I'll talk about earnings more today in my VIP room. Data today, data yesterday showed that New York manufacturing unexpectedly dropped to a 2.5-year low, Weaker than expected orders collapsed and employment growth stalled. That's very, very bad because we know manufacturing in China is down 40%. The orders are down about 40%. Today, all eyes are focused on the PPI report and the retail sales report. Both are coming out at 8:30 in about 7 minutes. Core retail sales is going to be big. Economists see this figure at negative 4% for December. Because remember, this is going to take into account December, so this is big, compared to a previous number of negative 0.2 month over month. So it'll be interesting to see where it stands. Industrial production will be reported today. Economists expect it to be negative 1% for the month compared to negative 2%, or 0.2, excuse me, negative 0.1 versus negative 0.2. In terms of China, uncertainty is still there. They're trying to get out of their COVID environment, but the country's still grappling with the worst COVID outbreak yet. And Japan surged to a 1-month high after the Bank of Japan maintained its current range of yield control, defying market expectations for widening the bank's policy. They're playing it really, really safe. Today, you may see some news on Moderna, United Airlines. They're reporting today. Moderna is coming out with earnings. And one stock that we're short is actually up today. Rats. Seagate, we're actually short the stock, and it was making progress, but it's up 2% pre-open after Morgan Stanley upgraded the stock. I can't wait to see what it does today and whether it closes up or down. If it closes near the bottom, then that report did not have much of an impact. In terms of earnings, you've got Kinder Morgan today. You've got, let's see here, Netflix is, I think Netflix is tomorrow. Yeah, you've got Charles Schwab today. You got Discover. You got a lot of financials. Wintrust Financial, a real estate. I think PNC is real estate. I'll have to investigate. But you've got Alcoa. You got Charles Schwab's. Alcoa is a big Dow stock. You've got Discover Financial, First Horizon, and Windsor Trust. So you've got some. And here's the expectations. Alcoa, they're expecting negative 57 cents per share. I don't remember the last time it had negative 57 cents per share, to be honest with you. Keep your eye on volatility because volatility looks like it's really low right now. And if volatility levels are at the low right now, it looks like they're going to rally because this is the lowest level we've seen since middle of last year. Actually, first quarter of last year. So I think volatility will pick up, which means market is due to go south. With that said, as I mentioned yesterday, NASDAQ looks like it's a little bit out of its range, and I think it's going to come right back down. I think the S&P 500 is going to go range-bound as well. I think we're going to cool off and come off, and I think we're going to see the bond market. Let me just give you an idea of what the bond market's doing. We're going to see the bond market also remain range-bound, which means if it goes up to this level, we'll sell it. I really want to sell the bond market, but I want to see it oversold. So if the market goes down a little bit as flight to quality, we may get that bar and hit the 200-day moving average. Nothing would make me happier than to see the bond market oversold so that I could sell it near the 200-day moving average. But we're not there yet, but it looks like we may be there. We're at 107.56. I'm only looking for about 3 more points to the upside. But if we get it, and it looks like we're opening up at 107.34, it looks like we may actually get it. Now, I want to show you guys something. In terms of sectors, energy, and I told you it would be energy, industrial, basic materials, financial, consumer staples. We're looking very defensive, and notice real estate is coming up. Real estate needs to start cooling off, and it will cool off. It's way, way overbought. But I'm kind of liking the current structure. The only thing I'm a little unsure about is healthcare and utilities. They really seem to have pooped the bed, so to speak. But every time I think about it, I think about, what's his name? Johnny Depp. With pooping the bed. Sorry, excuse me. Anyway, but I think utilities and healthcare are a little bit overdone right now. I'm seeing some opportunities there. Technology, communication services, consumer discretionary are still in the crapper. Matter of fact, look at how they look. Consumer discretionary looks like it's going to undo everything and come back down. Communication services looks like it's right at this resistance level, as I warned you yesterday, and it looks like it peaked out. And I talked about this yesterday being in a channel. And technology, don't hold your breath. I'm just not seeing that much more upside. I do believe energy stocks are going to continue rallying. I think industrial stocks will do well. But overall, I think the market's a little bit tired and needs to cool off right now. I think we're going to see more downside than upside. And let me tell you why. Because yesterday and the day before, we had, see how it's at 313 now? Look at last night, 473. When you see the 20-day breakouts get up to about the 500 level, it tends to peak out, especially when the bottom side is like at 33 versus 473. And today, that was as of Friday night. Today, it's already at 313, and I think it's going to keep cooling off. So I'm not expecting upside for the market right now. Now, remember, today's Wednesday, and Wednesday I give you my top stock and my bottom stock. Well, since energies are hot and heavy right now, I say we stick with energies. And to stick with energies, I want to go with something that's breaking out right now, like ExxonMobil. Exxon is looking really, really good right now. So is VLO. They may be coming down just a hair with the rest of the market, but I like the energy sector, and I like VLO, and I like Exxon. Now, in terms of the crappiest stocks, all we have to do is flip this over, and we have the crappiest stocks. And I'm going to tell you right now, SIVB Financial, I think the stock is going to come down to 200. And GNRC, Generac Holding, I think the stock is going to go to 90. And my favorite stock, Dish, wink, wink, I think is going to go down to about 1330. And VFC, I believe, will go down to 25. So if I was a betting man, or CTLT Catalent, I think is going to go down to 42. Any of these stocks will do just fine. But real estate trust, real estate. Remember I say real estate is the most overbought? VNO is a real estate trust. This is where I would sell. And if you look at a year, look at the trend, look at where it is right now. It looks like it's going to come right back down. So VNO is a sell, and VLO is a buy. And folks, before I let you go, there's been a huge shift in the market lately. We're starting to see options contract being traded on stocks than their underlying shares. That's right, more options than their underlying shares. There's a lot of activity with options right now. Options have a huge impact on a stock's direction, meaning it might become more important to analyze options data than stocks itself when it comes to identifying potential opportunities. And I'm not the only one saying that. Most investors are not prepared for this. That's why today, Jack Carter and Celeste Lindman, they're teaming up to hold a special presentation. Jack also has one stock he believes will benefit the most from this coming shift in the market. And guess what? He's going to share it live today at 1 p.m. Eastern Time. 1 p.m. Eastern Time, Wednesday, Eastern Time, 1 p.m. And today's Wednesday the 18th. You don't want to miss it. Jack Carter and Celeste are red hot. I want you guys in on it. Follow the link below. Check it out. These guys know exactly what they're doing. Don't underestimate how good they are. They are amazing. And they've been around the block a long, long time. Follow the link below, learn something new, and get Jack's stock. And again, there's something to following the options market into track stocks. There is something to that because options are now leading instead of lagging stocks. It's a big, big shift. You definitely want to check this out. Follow the link below, and I'll see you guys there. Bye. Take care. Have a great day. Remember, comments are welcome. Post feedback, and send me emails, support@marketgeeks.com. Bye, guys. Take care. Have a great, great day.